Welcome to This Week in Real Estate with Jonathan Harmon and Bryan, Nale, your local experts on all things real estate in Middle Tennessee. Listen in as they discuss the current state of the market, the latest trends, and have a little fun while doing it. We do want to say the opinions voiced on this podcast are for general information only and not intended to provide specific advice or recommendations for any individuals.
What are you doing?
Like a Superman, like Cam Newton kind of.
Oh, after the longest intro ever, Brian's over here doing poses. Man, golly, all that compliance stuff, dude.
Welcome to This Week in Real Estate.
Yeah.
We're glad that you are here.
Yeah. Yeah. Did you guys, y'all take notes on the compliance? Make sure that you don't hold him accountable to basically anything. Because that's what his corporate office
It's been the
requires.
Same compliance blurb since we've been doing
I know.
Why are you picking today to give me a hard time?
I mean, why not? I haven't before, so I'm going to now.
Oh, good times.
Enough is enough.
Man,
just let the man talk.
It's been a busy month.
Yeah.
It's been a busy month.
For you.
With headlines and
leaving me alone for a month or for a day.
And I'm going next week too.
I know. I'm not bitter.
Yeah, but I do have a sub lined up for next week, so you don't have to go solo.
Oh, yeah, that sucked. For those of you that watched last week when I was all by myself, I do apologize.
Jonathan did the show that normally takes us 30 minutes, and he did it in 18 minutes because there was none of this witty banter.
It was terrible. It was terrible. I was lonely. I walked out of here. I had a tear in my eye.
A little sniffle.
Mm-hmm.
Well, let's get into this.
Yes,
we got a lot to cover today. So market movers and headlines. Trent, take us there.
I still want to meet that guy.
He doesn't exist.
How do you know?
I think Trent made him in some kind of AI platform.
Oh.
So, man, THDA has been on a tear this month. Like
added teachers.
Dude, like it came out last week, and you wouldn't have had time to put it into the show. But last week, THDA came out and they did something that I think a lot of us wanted for a long time, and that's that they included teachers.
I talked about it last week.
Did you? Okay, good.
Yeah, in the hometown hero or
home
whatever.
ownership for heroes.
Yeah, that's it. Mm-hmm.
Yeah, so homeowners. There's so many different heroes programs out there. And I say heroes in quotation marks, not to say that they're not heroes, but because there's just so many.
The definition is different.
That latch onto that phrase of heroes.
Mm-hmm.
THDA, including teachers, and a couple of things to mention here is K through 12 teachers. So college professors, it doesn't apply to them. It doesn't apply to the people that work in the school. There's other programs that might pick up, anybody that works in the public school system. So it could be a janitor, it could be a custodian, lunch lady, teacher's aide. This is for K through 12 teachers. But man, what a great thing to include them in this program. So what this means for the homeownership for heroes, the biggest thing is that, and I can say this right now, as of today, the current interest rate for THDA through the FHA program is 6.125%. Well, the homeownership for heroes, they get a 50 basis point discount on their interest rate. So they would get 5.625%.
And down payment assistance, right?
And then in addition to that, they'd also get the down payment assistance. Now, they could have always done a THDA loan where they get the down payment assistance, but now they get the added benefit of that reduced interest rate, which increases their purchasing power, lowers the amount of interest that they pay,
or keeps the purchasing power the same, and it just lowers their payment. A lot of people will choose the 5% grant option. THDA will give you a 5% grant, or they will give you 6%. $6,000. If you choose the $6,000 option, then you just pay that back whenever you are ready to move out of that home or refinance it. So whenever that loan ends or you vacate the property, you pay the $6,000 back with the, and there's no monthly payment on it. With the other option that most people are going to choose, they take 5% of the purchase price
up to $15,000, and they will get that, and then they make monthly payments on it. So monthly payment is this, and it's amortized on the same term, so 360 months, and the interest rate matches the first position mortgage. So they would save money on the second mortgage and the first mortgage.
And here's the thing: you could aggressively attack that second,
right?
If you have some extra cash. It's not a huge amount, right? It's not like a $100,000 HELOC or something,
right?
But you could aggressively attack that, and within a few months, a year, 2 years, whatever,
you could have it gone,
and all of a sudden your payment drops pretty substantially.
Usually, for most people that are getting in that neighborhood of the $15,000, it's usually going to be $90 to $110 a month or so.
Yeah, pretty cool. And there's no penalty, of course, in paying that off early. It just helps you stretch out if you're not able to save a ton of money, or you haven't been able to, right? You just got started or whatever. You can pay that off pretty aggressively.
Maybe you've got some money. I've helped a lot of families who've got some money saved for some down payment and closing costs, but they're able to keep that cash liquid. You buy a home, man, you always have to prepare for added expenses and unexpected expenses.
Or even the expected. If nothing else, you've got a shower curtain and blinds, and
you may need to buy a lawnmower. Like there's all these other expenses that come with home ownership. And so being able to hang on to some of your cash and keep it liquid is massive.
Yeah.
But wait,
there's more.
There's more.
Are you going to throw in a ShamWow?
Today, THDA has increased the purchase limit. So previously, go way back. Every county used to have a different purchase limit. So you might be able to buy a house in Rutherford County, but if you go across the county line to Bedford County, the same property, the same list price may not be eligible for THDA because the sales price could be over Shelby County's limit. Well, about
Bedford.
Yeah, sorry, I said Shelby, meant Shelbyville. About 2 years ago, THDA made it uniform across the state, eliminate all this guesswork, make it transparent, make it clear. It was a $400,000 purchase price limit, which was great. It was welcome. It was a very welcome change at that time. And then after a while, it got to be like, man, 400,000 in some communities is pretty tough. And also, that doesn't, and so I'll say this, I'll give the news first. They've increased it to 500,000 as of today. So as of today, the purchase price limit for the entire state of Tennessee, doesn't matter what county you're buying it in, is $500,000. And does that mean that that's kind of like what the average price of a starter home is? No, it doesn't. It doesn't mean that. But what I think it reflects is aging first-time home buyers. So as more first-time home buyers aren't recent college graduates with their first job, that are truly looking for a starter home, you have more established families that are finally stepping out of renting and into home ownership. They might need something that's a little bit bigger. They might need something that's got more yard than a townhome might provide for their family.
And it's move-in ready. So the reality is,
too. That's a really great point.
In Rutherford County, under 400 right now, you can find some small single-family 3-bedroom, 2-bath homes under 400. You can even find some way out on the outskirts, perhaps that are in pretty decent move-in ready condition. But a lot of what you find under that 400 mark is going to, it's going to need some work, or it's going to be a townhome.
Well, that goes to that's a great segue into my next point. It was that some communities you do need to be at $450,000 for a starter home. So this increase allows for a lot more opportunity for first-time home buyers to get that down payment assistance.
So I have a question then. Correct me if I'm wrong, but THDA has always been about household income. So if you got 2 parents and a kid that's working, it counts all of that income. Is that correct?
Not anymore.
Okay.
It used to be about household income. And so we would have to get, W-2s and pay stubs from non-borrowing spouses and things like that. Currently THDA only goes by qualifying income. So if you have a kid who's working, they're not going to be on the mortgage.
I always thought that was the dumbest rule ever.
We don't have to count that in the income. If you have, let's say you have 2 spouses, one of them's got a credit score that qualifies, the other one doesn't. We don't have to count the liabilities, or do we have to count the income towards the income limit for the spouse who's not going to be on the mortgage?
So did they also level out the income cap?
Not yet.
Okay. No, so $500,000 purchase limit is irrelevant if the income doesn't qualify.
But the income limits have been they're workable. Yeah.
Do you see what I'm saying though?
I do. That's the first place my mom went to for a lot. So for your more rural counties, for someone to meet the income limit and 500,000 is probably not going to happen. So they can say that the income limits or the purchase price limits for, Obion County out in West Tennessee is $500,000. But the reality is somebody who makes enough money to afford that $500,000 house payment is probably going to be over the income limit for Obion County.
So realistically,
it's capped at a debt to income ratio limit. And you can't say that, carte blanche what it is, because everybody's debt situation is going to be a little bit different. But it's, they're capped at 45% on debt to income ratio. And for the FHA program, which is the most common. And a lot of times that's just kind of what I defer to talking about.
Right.
So they're capped at 45% on the debt to income ratio, which means that for every dollar that you make, you don't want more than 45 cents going out to your house payment and other debt that you have. So
the more debt free you are,
the more purchasing power you have. And that goes to,
that's common sense.
That's for any mortgage program.
Dave Ramsey 101 right there.
That's for any mortgage program out there. But for your people in your more urban areas, this that already have income limits that are realistic, this is going to be a very positive change.
So the income limits are still based on when it's some type of multiplier on average income or
size situation. So when we look at the income tables, and I wish I had them in front of me so I could give some numbers. I don't want to quote anything from memory because I learned a long time ago, don't memorize these numbers because they can change at a moment's notice.
Immediately. Yeah.
So I always go to check to make sure, I'm current on these things. But the income limit for, a household size of 1 to 2 is going to be lower than if it's 3+.
Right. But is it also based on the average income or median income for that particular county as well?
So your metro, and here's a funny little caveat, most of us don't lump Cannon County into the same as Metro Nashville, but Cannon County follows the income tables of the Metro Nashville MSA. So the income limit for Cannon County is the same as Rutherford, Williamson, Davidson,
which it's as rural as any other county out there.
Now you go to the other side, the other border of Rutherford County, you go to Bedford County, it's not going to work.
Isn't that? Yeah, that's weird.
They have a different income limit.
So what I was going to say though is they leveled out the top purchase price or the cap on the purchase price. But they did not level out all of the incomes.
Correct. Yeah. The incomes are
still on THDA.
Still going to be county driven. And I don't expect that to change, but I would not be surprised if we don't soon see an increase in the income limits.
But to me, those things should travel together, right? Don't tell me that my purchase price limit is 500
when realistically there's no way somebody in some of the more rural counties is going to make enough money to afford that payment and be under that income limit.
Now, granted, a $425,000 purchase price in Obion County,
right,
in my mind, does not look the same as a $425 purchase price in Rutherford. Yeah. Interesting. So many moving parts. Ladies and gentlemen, if you have not figured this out yet, you need to have a professional that understands what's going on, understands all the moving parts. And here's the thing, you probably need to have not just a professional on the mortgage lending side, but you need to have a professional on the real estate side that at least understands enough not to give you advice, but to tell you the right questions to ask that guy.
Yeah. And to know that there's questions that need to be asked, because if you've got a realtor who doesn't at least know enough to quote unquote make themselves dangerous, like to say, hey, wait a second, you should probably go back and check this. You got to have, I think, like, just like I need to have a basic understanding of what's happening in the real estate market, but I don't need to be the expert in negotiating contracts. A good realtor needs to have at least a basic enough understanding of mortgage and home inspections and insurance and title. Like what you guys have to have is
and all the products.
So much more encompassing. You need to know what's out there so that you can make recommendations to your clients on who to talk to.
And because the reality is the basic stuff, right? THDA, FHA, for the most part, VA, and conventional, any mortgage lender has those products at their disposal, pretty much, right? But there's always going to be some subtle differences that you need to ask the right questions and just make sure, and not that Bryan would do this, but just make sure that the mortgage lender you're sitting across the table from is giving you advice, not directing you towards something that benefits them a little more.
Right.
And I'm not accusing, I'm not saying anything like that. But then also within every company, Premise has products that other companies don't. And, whatever, Wilson Bank and Trust has products that Premise doesn't. Right. So be aware of that and ask the right questions. But the most dangerous thing you can do is not even know that you should ask questions, right? So don't be blind about this and ask questions. And if something doesn't smell right, ask your agent if you're more comfortable with your agent. And then the agent hopefully knows enough to say, why don't you ask this question?
And to kind of wrap up our conversation about THGA, I think we'd be remiss if we didn't talk about this aspect of things too. For a solid 2.5 years, I don't think I originated more than 1 or 2 THGA loans.
Was this like 2020
through 2022? Yeah. It was incredibly hard for any first-time home buyer using any kind of down payment assistance programs to get a home and go under contract.
Yep.
So while these changes THGA have made are phenomenal and fantastic changes, you strike while the iron is hot, because at any time the market shifts more towards a seller's market, these options aren't going to go away. They're still there, but the reality of using them can become much more difficult.
But yes, that's 100% true. The other piece of that, though, is that THGA was aware of that at the time, and they've started to make some adjustments to make their product a little bit more attractive across the board, right? Even to sellers.
Yeah.
So, if they can get the income limits accurate, they got their purchase prices up, all of those things that they're a little slow to move, but they are at least, I mean, gosh, man, you go back to like 2010, 2011, 2012, THGA product was very specialized and it had lots of strings attached to it. And, just the way that they went about it, it was not attractive for sellers. And so it kind of gained a reputation as a lower product.
Well, what happens is and the reason for the concern is if you have a conventional, 20% down loan versus a THGA with down payment assistance, you're inherently, as a seller, you may be worried about that THGA loan getting the closing table because they're a car breakdown away from losing their job.
That's right.
This is your conception. It's the reality. Everybody's situations are different, but the conception or the
they don't have any money
is that they need help to buy the house. They may not. It might just be that this is the best loan program for them and it's available to them, so they're going to take advantage of it. But also, there's that whole second underwrite thing where FHA might be approving the loan, the bank might be approving the loan, but now THGA is going to have to review it, and if THGA doesn't like it, THGA can say, we're not going to fund that grant.
Well, and there's more time involved. There's lots of reasons. Yeah. You go through, like, a rural development has a second underwrite as well, or at least a rubber stamp, so to speak. But it moves pretty quick, and you can tell
it does until they get bogged down, and when they get bogged down, it runs into a brick wall.
But they at least post how long it should take.
Right.
And THGA, sometimes it's a day, sometimes it's a lot longer.
A bank that's submitting enough applications to THGA on a regular basis will have a feel for that.
Right.
We will talk about this in our morning conference call. Hey, if you got any THGA closing in the next 2 weeks, just know that the one that we sent in last week took 4 days to come back. Mm-hmm. Or no, you're fine. Don't worry about it. We submitted one yesterday and we got it back today. Mm-hmm. So we kind of have a finger on that pulse. While I don't publish it, if we're submitting enough loans to them, we know kind of what their turn times look like.
But in the seller's market, you're not going to be submitting that many. You see what I mean? So there's
well, they're not in a seller's market. They're not going to be backed up.
Exactly. And this is all my point, right? Is that you have to be able to gauge all of these variables as a professional and say, here's what to expect.
Yeah.
Right. You coach me even on, hey, look, we can't turn this loan in 20 days or whatever. Right. And I always check, especially if I'm asking for something a little bit outside of the norm in order to try to negotiate a deal to get done. Hey, we need a fast close. Well, in this particular market, THGA may not work and this person has to go THGA. So
again, that's not a negotiating tactic you can use.
Exactly. Try something else.
Yeah.
Right. And so, and that's the point, is having a team, having folks that understand each other, understand a little bit at least, or a lot sometimes, about what the other person is up against. And having a unified front on your side will always win.
I don't know how we can do this show today and not talk about the Federal Reserve.
Let's do it.
So I'm not even going to segue or smooth transition. We're pivot. We're talking. We're talking
right turn.
We're talking Federal Reserve now. Kevin Warsh was confirmed yesterday. No big surprise. No headline there, other than the fact that it's actually happened.
Mm-hmm.
Kevin Warsh is going to be the new chair of the Federal Reserve. And so,
my grandmother used to say Warsh. By the way,
what does? Yeah, I bet she did. I bet a lot of grandmothers did.
Go wash your hands.
I gotta wash these clothes.
Yeah.
Let's talk about what that means for interest rates.
Yes.
Okay. We talked at pretty good length a few weeks ago after the last Fed, Jerome Powell's last meeting, about his exit commentary, the fact that he's staying on.
His last meeting as the chairman.
Yeah, last meeting is a good caveat, good because he's announced there that he's staying on as a governor.
Mm-hmm.
We talked about the dissenters. There were 4 dissents on the minutes from that meeting. And 3 of those were people who said, we don't want language in our statement that might indicate that rates could be lowered later this year. They wanted a more neutral stance, and that they will make their interest rate decision based on the economy and inflation, which basically comes down to jobs and inflation. So when you're thinking, and I say this because I feel like there are a lot of people who think, okay, now Trump's guy is in, and we can expect them to lower interest rates. So here's the catchy thing here is that he's just the chair. He can't change. He can have his policy, and he's the leader. So he's got a lot of sway,
influence. Yeah.
But at the end of the day, it's going to be a vote by all of the board of governors, and B, they're already people who are like not keen on lowering the Fed target funds rate. And if they do lower the Fed target funds rate, there's a likely scenario where that could increase mortgage rates. And I'll explain how that works. So and we've talked about this a lot, and I feel like most people watching our show probably know this, but it's a good refresher. And there may be some people who don't. If the Fed lowers interest rates and the bond market is worried about inflation, then mortgage rates very well might go up, because the 10-year treasury would go up and mortgage rates are going to follow that.
Mm-hmm.
So that's massive. So if you see the next time the Fed meets that they've decided to lower interest rates, what that means is their short-term interest rate, the banks charge each other for overnight lending, that Fed target funds rate has been lowered, probably 25 basis points. I highly doubt they would do 50 basis points. So if they do that, and you have a credit card balance, your minimum payment on your credit card is going to go lower. HELOC balance, your minimum payment is going to be lower. If you're shopping for a car, you're going to get a lower interest rate on your car loan. All of those short-term debts are going to have lower rates.
Mm-hmm.
But the bond market is going to see that and think all of those things might spur spending. And more spending is going to cause more inflation. More inflation is going to cause prices, and that means prices are going up. And so to try to slow that down, they might I got out in front of my skis a little bit. They would be worried that the Federal Reserve would have to knee-jerk react to their own decision the next time they meet and raise rates. So mortgage rates and 10-year treasuries are going to go up. So I'd be personally, I would be surprised if we see them cut rates the next time they meet. And B, if they do, I don't think that would result in lower mortgage rates.
Yeah,
that's my opinion. That's not my bank's opinion. That's
refer to the opening.
The opinion of this show. That is the opinion of Mr. Bryan Nale.
Well, and from a completely different perspective, just from the psychology side of it, right? I don't see where lowering mortgage rates benefits anybody right now, other than a consumer. But even then, long term, it doesn't.
Yeah,
because I think at this point we're at the point where we're starting to see prices kind of taper off a little, not a ton. We're not losing value per se, but we're seeing it taper. We're seeing negotiation happen more. And the second that somebody says, "Oh yeah, better mortgage rate or whatever," and it doesn't even, I don't think, have to be a lot.
I think if we could get into a range, I mean, we were kissing that number, and that number is 5%.
Yeah.
And at the end of February, we were pretty much there.
And we saw consumer behavior react to that, or start to.
Yep.
Then the war in Iran starts, all that changes, interest rates go up.
And I'll say this too, not just Iran, but we got into spring break. And as people are wrapping up their spring semester, for seasonality's back, and we've said that for a few years, as people are wrapping up their school year, they're going to stop looking at houses. They're going to stop thinking about moving until summer hits.
Yeah, but then at that exact same time, rates go back up, and I mean, it's just been absolute stagnation.
It was like taking a sledgehammer to the market activity that we saw.
Yeah, and so dropping that because that definitely did raise up some hope. You know, I think we have more pent up demand, which what a psychologist would call pent up demand now than we did in January.
I would agree.
Just because we had a little glimmer, and then
there was some buzz, there was some excitement. Yep.
Absolutely. So I don't know, man. It's an interesting time we live in, and it's hard to know. I mean, we can sit here and pontificate all day on what we think would be the best for the overall economy, what we think is going to happen, what we think Kevin Warsh is going to do, what we think Jerome Powell's going to do as a governor, like all these different things. And the reality, something else will happen that is completely out of left field that we're like,
well,
didn't see that coming.
I want to kind of, unless you got more to say, I kind of want to wrap this up with a tease for next week. Wait, no, I'm not going to be here next week.
A tease for next? That's not a tease, dude. You just told what's going to happen next week.
I'm not going to be here next week. Okay, something that we need to get into in this show, maybe the week after next, or maybe David can cover this next week. David Manier works with me. He's going to be here in this chair in my place next week. But we need to talk about the unsung hero of the housing industry. That's the tease. The unsung hero.
Well, I feel very teased right now.
The unsung hero in 2026 of the 2026 housing market. So we're going to get into
Jonathan Harmon.
So you guys you've got 2 weeks to pontificate and 2 weeks to think about what is Bryan talking about. And we'll come back in 2 weeks. I'll come back in 2 weeks. You'll be here next week. I'll come back in 2 weeks and I'll give you my opinion on,
I'm gonna make
what
something
the
up.
Unsung hero is.
It's Underdog.
2026.
There's no need to fear. Underdog is here. Remember him?
I do remember.
Yeah. All right. This is real. Huh. God lives in their kitchen. Oh.
I think.
Wait, there's somebody on the right.
There's someone on the right who sees the light. Don't go towards the light, Granny. Don't go towards the light.
What was her name? Margaret Ann? No. What was in Poltergeist?
I don't remember. But
Carol Ann. Thank you, Carol Ann. Carol Ann. Oh, well, this is a great picture. It said no one ever. Okay.
It's so moody. It's just dark.
No, it's just moody. Bad. Don't take pictures with your cell phone. So
turn on your lights.
Yeah. And get out of the picture. Is that a dog too? On the underneath the person in the red shirt? Is that a dog? Some kind of fuzzy something. Yeah. Oh.
That's a weird room.
That's terrible. All right, next. Pro tip of the week. All right. So in light of that picture, I'm going to throw two things out, and then I've got my actual pro tip that I planned. Number one, make sure you hire a professional. If
that's been said once on this show, it's been said 1,000 times.
Well, I have seen I've been showing a lot of houses here in the last couple weeks, and I have seen so many homes with cell phone pictures. And I'm going to just go ahead and call it out. And if you don't like it, agents, then change what you do. Also, so many houses with combination locks. So these are 4-digit combo locks, $12 or whatever at Lowe's. And it's not like, hey, this is a cheap house, so I'm not going to spend the money on it. This has been across the board. I showed an $850,000 house last week that had a combo lock on it.
Not a Sentry lock?
No.
Wow.
And Sentry locks are $120, $125, whatever they are. And they are so significantly more secure. And the family lived there in this 800, like it wasn't a vacant home. And
so for the uneducated, I am that guy. What's the difference? What makes a Sentry lock more secure than
accountability? Okay. So I can access a Sentry lock because I pay for access to Sentry lock.
Yeah.
And every time that my code is used on that lock, it documents it.
Okay.
It documents when I accessed it and when I left.
So if I'm a phony realtor or a realtor going bad, and I have shown a house. Let's say I saw something in that house that I liked, and I know that I can watch
the combo code.
With the combo code, I can go back to it anytime I want to get in there.
It gets worse, Brian. So not only that, but at least when I show houses, not everybody's the same way, but at least when I show houses, I frequently have an MLS sheet and I'll take notes on that, right? Put it on clipboard, whatever. Well, what is to stop my client from seeing or watching over my shoulder or whatever as I put in a combo, or looking at that piece of paper as I put in a combo and memorizing? It's a 4-digit code, y'all.
Yeah.
And then they come back at some point. Also, what's to stop an unsavory agent from saying, I don't really have time to show you that. Here's the combo code. Go
look at it. Yeah.
Nothing. And there's no accountability.
Well, I know that that's happened.
Oh, it happens. It's always a topic of conversation when we talk about ethics. So agents, protect your clients. I mean, think about this. The people themselves, if they still live there.
Yeah.
Right. But also their property. Get the extra. Nothing's perfect. No system is perfect. I get that. Right. You can still give somebody a 1-day code or whatever. But at least if you give them a 1-day code on a CentriLock, right, it ties your name back to it. So there's some accountability there.
Yeah. Yeah. At least you know who was there.
Or who you're granted access.
Yeah.
Right. You don't with a combo lock.
Not at all.
At all.
Okay. That turned into a great pro tip right there.
Yeah.
I think you've got more.
Yeah. So hire a pro that uses the tools. My last question is, we also have agents that don't pay for access to the CentriLock system. And so they call me. I put CentriLocks on all of my stuff. They call me and ask for a code to get into a house that they're trying to show. Right. My question to you is, would you hire a carpenter that showed up at your house to work and asked to borrow your hammer?
Wow.
I would not.
Yeah.
Are they really a carpenter?
Yeah.
We'll leave it at that.
Nothing more needs to be said.
Yeah. Next thing, while I'm on this soapbox, I forgot what the other one actually was. Oh, I know what it was. If you don't like no, then don't take no for an answer.
Oh, wow.
In negotiation.
Yeah.
Right? So every no moves you closer to a yes. And so we need to, if you're negotiating, and this is across the board. This is with houses, this is with cars. I have negotiated groceries, y'all.
Wow.
You can do it.
Yeah.
Right? You
at
sometimes
the farmer's market or at Publix?
Oh, well, I don't go to Publix. That's too bougie for me. Kroger though, and Walmart for sure.
Really?
Absolutely. You find something that's damaged, or you find something that's close to date, or
go
whatever.
To customer service, and you say, "Hey."
I just ask the cashier, and then they'll call somebody over.
Yeah.
Now it embarrasses the crap out of my kids, but
I bet it does.
Who cares?
Dad.
Just pay for it, or don't. But can we just not do this? But the answer is always no. If you
every
don't
no
ask.
Moves you closer to a yes.
Every That's no great. Moves you closer to a yes. And there's some balance to this, right? I mean, you don't need to be like a petulant child or anything. But yeah, just don't be afraid to push back.
Amen.
And if you don't have the ability, like if you're so non-confrontational and you're scared to do it, hire somebody that isn't scared.
Yeah, that's great. Yeah, cool. Great pro tip. I think we got a shiny penny.
Do we?
Yeah.
Real quick, should we start calling these shiny nickels since we're not doing pennies anymore?
Yeah. Yeah. Shiny nickels. But Trent, dial that up for next week. Shiny nickel.
RIP pennies.
Yeah. I mean, I think that's brilliant. Good call. Shiny nickel for today. Jonathan and I and about 35 to 45 or so other Blue Raider fans went over to MTSU yesterday.
Yeah.
And we got to sit in a room with the head football coach of MTSU. His name is Derek Mason. And we had 2 members of the team's secondary, defensive backs, and
the D-backs coach
and their coach, their position coach. And they were showing some highlights from their last scrimmage on the screen, but as they were showing the highlights, they didn't really break down the plays, but Coach Mason was talking about what he sees in this team, what's going to make them more competitive. And he said something that I ended up sending it to my son, because a message that I send to my son or give to my son all the time, and I want him to understand this because nobody told me when I was a kid. I always heard people come to me and say, you've got so much potential. And they didn't mean it in like a bad way. They were encouraging me. They were like, hey, you got a ton of potential, man. Like, you seem like you're a really good kid. You seem like you got a good head on your shoulders. You got so much potential. No one ever said that potential without some hard work would just remain potential.
Mm-hmm.
And it wasn't until I was probably 35 that kind of clicked. What I really needed to be doing. And so that was, that's something that I try to stress to both of my children. And Derek Mason said this yesterday, and it's a great way to kind of phrase that. And that's that your talent is your floor, not your ceiling. And I wrote that down.
Yeah, that was a great moment when he said that.
Your talent is your floor. Mm-hmm. You know, you can work hard to improve your talent, but that's still just your floor. How hard you're going to continue to work is
mindset,
your attitude, your mental toughness.
What are you doing with it?
What are you doing with that talent? You know, that's your limit. And really, when you put it in that perspective, is there a limit?
Well, if you, I mean, the analogies can go on and on and on along with this, but you put it in like a scientific term, you have potential energy. Right. Yeah. And it's stored up possibility of something.
Right.
But the only way that it becomes kinetic or chemical or whatever energy is that you throw a catalyst in there.
Yeah.
And so is that catalyst, you know, you have a ball sitting on a hill, right? It's just sitting there. There's potential energy. Well, the catalyst has to be you push it.
Right.
Right. Or it's a chemical compound and the catalyst has to be, you know, you add heat or you stir it or whatever. Right. And we're the same way. Right. We can sit on all this, you know, mental ability, physical ability, all of these potentials, all these talents. And until you decide to throw a catalyst in it, in other words, you stand up and start moving or you start typing or whatever it happens to be, until you throw that catalyst on it, does the potential even freaking matter?
Right.
I mean, it doesn't.
Right. Love it.
Doesn't matter.
Thought that was a fun time yesterday.
It was.
And
that's the fourth one. I've been to all four.
There's one more left. They've traditionally been scheduled at the exact same time as a Chamber of Commerce diplomat meeting, so I haven't been able to go, but they moved this one up a week, and so I could attend, and was very thankful to be able to.
June 17th, is that the next one?
I think so.
It's a Wednesday. Yeah. Fact check me on that.
It's usually the third Wednesday of the month, which is a direct conflict with the Chamber diplomat meetings. So the
Coffee with Coach, 8:00.
This time they moved it to the second, I think, to allow some press to be in the room. It was great.
It's awesome, man. And look, y'all know me. I'm like Blue Raider faithful, like painfully sometimes, you know.
Yeah.
I'm the incoming BRAA president. I mean, all of this stuff. And I love my Blue Raiders. I love my alma mater. I love my Blue Raider football team. And I like Derek Mason.
Yeah.
I really do. And I think that he has a lot of the resources in the right places now.
Yeah.
And I think that sometimes it takes a little bit of time to get barriers out of the way.
Yeah.
Is that a good way to say that?
Totally. Yeah.
And I think he's there. And I'm always cautiously optimistic about my Blue Raiders, but I'm a little more optimistic and a little less cautiously this time.
I think, and I read the recap on the Tennessee end of the activity that we were at yesterday, and he spent some time with the media afterwards and got in a little more detail. And I really think that he thought they had the pieces, the players last year, and for whatever reason, whether it was before the season really even got started or as the season got started, he realized that he didn't have the right guys in the locker room.
Mm-hmm.
They didn't have the right culture, and they feel like they've fixed that. They asked a lot of players to not come back. They brought in some new players, and the energy, it's all hearsay until you see it on the field in a real live game.
100%.
But they said the energy around the spring practices has been better. The focus, the culture of the team wanting to push each other and challenge each other, compete with each other for starting in positions and for playing time. All of that they didn't really see last year, even though they thought they had the right. And this is another good point. They thought they had the talented players,
and they did,
individually, but they weren't a team. And
that's it.
And so now they feel like they've got the right team, the guys who want to be in that locker room, who are studying the game, putting in the extra work and the extra effort, so that their talent will be on full display when we see them take the field this fall.
I'm excited.
Let's go Blue Raiders.
Let's go. And if you want to jump in on this, I know a way that you can help. So we are definitely actively recruiting for the Blue Raider Athletic Association. And you can get in for as little as $100. The 250 level, I believe, does it still come with a season ticket?
I don't know if that ended with the membership drive or not, but we can find out.
We can talk for sure. But come on, man, this is your hometown team. You know, some people look good in orange, very few, but everybody looks good in blue.
Amen.
Yeah,
I think that's a show.
I think it's a show. Good job. All right, Trent, we're done. Okay, there we go. That took a long time.
Thank you for listening to another episode of This Week in Real Estate with Jonathan Harmon and Bryan Nale, your go-to resource for all things real estate in Middle Tennessee. Be sure to like, share, follow, subscribe, and leave us a 5-star review. We will see y'all on the next one.
Now for the nitty-gritty. Primis Mortgage Company is a subsidiary of Primis Bank, a member FDIC. Primis Mortgage NMLS number 1894879, BK number 1042893, ML number 1894879. As always, all loans are subject to credit approval and product guidelines. Equal housing lender.